Hey guys, how's it going? And thanks for coming. I'm Nick, and this is Real Life Money, where we talk about real life and money, because you know schools aren't, so let's get started. So this is a stock market weekly recap, guys. If you've been following us, welcome back. And if you're new, what we do is we look at the previous week to see how the stock market did. We look at some important news things going on, some individual stocks and mutual funds to see how they did. So let's get into it. Alright guys, so as always, starting off with the overall market, starting off with Dow Jones Industrial Average, still above the 22,000 mark, fairly strong at this point. But for this week, you could see it was fairly choppy, but it was up 0.3%. Now, aside from the Dow Jones Industrial Average, we'll be looking at the S&P 500. I have found a better site to actually show you guys of how it has done throughout the week and also a year to date. So, boom, I'm using CNN Money. It's actually very cool, the chart. But you can see for this week, fairly strong, up 0.72%. And you could kind of see on the top right over there, year to date, still over 12%, doing well. So, some popular news stories. I'll be honest with you, I didn't follow it too closely. I don't believe anything too crazy happened. But on Monday, there was a tech sell-off. A bunch of tech stocks, as you'll see when we go into the individual stocks. Earlier on in the week, they dropped, and then as the week went on, they kind of rebounded. But there was a tech sell-off in the beginning of the week, as well as there has been talks about tax reform. President Trump is trying to get a tax reform, lower taxes for businesses. And again, whether you agree with this or not, guys, you can't deny the fact if businesses have lower taxes, the market's probably going to do very well just because they have to pay less in taxes. So they're going to be talking about this probably for a while into next week, guys, with these tax reforms. We'll just have to see what is going on. And another quick thing involving gas, oil prices. Recently, I've seen that they have been doing very well this past month. So I'm going to put up some charts for you. I'm just looking at Exxon Mobil, one of the largest oil companies in America, probably in the world. But you can see in the past month, they're actually up around, I believe it's 7.5%. And if you look at this chart over here, I put it to 6 months. It did drop a bit, and so it kind of rebounded and moved further on from there. I don't know the main reason for this. I do realize that it did start to rebound when a bunch of hurricanes started hitting America with Hurricane Harvey and Irma. And then since then, who knows? Now that was just to show you how stocks can move, especially if they're in like a low type of period. Remember, if you hold on to them, most likely it'll probably rebound. Now, gas for the long term, who knows? You know, several years ago, gas was at like $100 a barrel. Now it's like struggling to keep $50 a barrel. So we'll just have to see how it goes with that. Of course, we got more electric cars out there with Tesla, so anything could happen. But let's finally get into individual stocks, starting off with, boom, Apple. Again, I'm going to use these charts a little bit more just because they're cooler. But you can see Apple, they closed at 154.12 on Friday. For the week, they are up around 1.5%. Year to date, they're crushing it still at just over 33%, guys. Now, for last week, we saw, I believe they were down like 5%. So they did come back a little bit. Some of the main reasons why Apple was getting slammed last week and kind of into this week was the service that the new Apple Watches were giving, and also iPhone 8s. Service wasn't the best with the Apple Watch, and I believe they are still having problems with iPhone 8 with possibly audio quality or such things like that. But we are still waiting for the iPhone X or 10, whatever you want to call it. That is coming out beginning of November. Now, Apple's a great company. If we're looking at the long term here, guys, which we usually do, I see no problems. You know, if there's a problem, most likely a company tries to fix that problem and then it just grows on from there. So Apple was kind of in like the bad news phase. It keeps getting slammed. So that or this right now could be considered a buying opportunity for the long term. We'll see how it does. Moving on to our next stock that we're looking at is Disney, guys. All right, for this week, fairly flat, little ups, little downs, but overall it kind of evened out. Year to date, still down over 5%, still under $100. Again, long-term play, I do see this rebounding. It might take a little longer than expected, but all I'm going to say is Star Wars coming out soon. I feel like once that happens, it might start being more attractive to more investors. Coming up to our next stock we're looking at is Facebook. Now, Facebook had a very interesting week, guys. You could see in the beginning, they dropped. Monday, they fell 4.5%. And that was for multiple reasons, probably more than we even realized. But I saw some main things where Zuckerberg was selling some of his shares. That's the CEO of Facebook. And also concerns with China. There was fake news out there. A bunch of stuff going on. So you could see that it dropped. But it also rebounded. So that was kind of a dip. And then you gained fairly well. You could see obviously Tuesday, Wednesday, Thursday, Friday. And guys, Facebook is just doing disgusting this year. They were up, I believe it was 40% on that chart. But moving on to next one is Google. Google closed at 959.11 for this week. They did fairly well, actually. They were up over 3%. You could see the sell-off on Monday, and then it rebounded and continued going up. For year to date, they are over 24%, doing very nicely. They were actually down toward the lower 900s, and they're finally starting to rebound a little bit back up. And finally, our last individual stock that we're looking at now is Starbucks. Starbucks closed 53.71. For this week, they're down 2.5%, so not the best week, guys. And you could see on Friday, they dropped a bit. And that I actually just looked up. It seems like their coffee store's growth has slowed to 2011 levels. So obviously that's unattractive, so that would definitely explain the decline. Year to date, they are still down 3%. So those were individual stocks. Let's move on to a couple mutual funds that we're looking at, starting off with Fidelity Contra Fund. Now, I do have it set for a month, guys, but for the past week, they are up over 1%. And of course, again, they are holding companies that we're looking at as well, including Facebook. Also, Amazon's in there as well, Google. So with that tech rise later in the week, it got included in this. So they closed at 121.20. And last but not least, our last mutual fund that we're looking at is our small cap mutual fund. Now I have it set for a month again. And you can see their rise has been fairly well so far for this month. Around 5%, and for the last week they're up over 1%. So with these smaller companies, rather than the big companies that we're normally looking at, more risk, more return, they are doing fairly well. And those are everything, guys. I guess the main thing that we're kind of looking at for the coming weeks is what's going on with this tax reform. If there's any type of tax reform, that would definitely affect the market. If taxes decline, that would definitely make stocks more attractive because businesses will pay less. Whether we agree with that or not, that's a separate story. But again, I will still continue to suggest to invest into monthly index funds for the long term. That'll help you out. If you have any questions, comments, concerns, leave them down below. I love to hear what you have to say. And don't forget to subscribe to my channel, Real Life Money, where we talk about real life and money, because not many people do, guys. So thanks so much for watching, and I'll see you in the next one.